What's up? What's up? What's up, everybody? Happy Friday. Hope everybody's having a great day. It is the daily market commentary. I'm your host, Chuck Fulkerson. Glad you're able to make it in as we are rounding out the week. This is our last daily market commentary for the month of October. Is it just me or is time literally just flying? I mean, I swear to you that I was doing the last one for the month of July, and now we're all the way over to October. So, for those of you that are new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts, the updates, all those fun things as we happen to go through them. Today, what we're going to do is go through our futures markets from an educational perspective, looking for both breakout and reversal trades. As always, do me a favor, leave comments in the chat window. If you guys have questions, just feel free to ask them inside of the chat window. It makes it pretty easy for me to take a look and see those. So, like a Godzilla-sized mosquito. All right, so let's go ahead and get into this thing. One of the things I wanted to start with is we want to see what did the earnings yesterday of some of our big-time stocks have to do with our futures markets. So let's go take a look real quick at pre-market trading for our stocks that had earnings. And all I'm really looking at is this area up here, the price at which we closed, and then the bid and the offer. So we can see that Apple is trading. It looks like it's going to open about $5 lower. So in the grand scheme of things, down a couple of percent. Looks like Facebook is going to open up about $1.50 lower. So really not that big of a deal. Amazon looks like we're opening up significantly lower, about $60 a share lower in Amazon. But then again, once again, on a $3,200 stock, it's not too bad. Google is really the big one. Google is actually opening up $100 higher. So Google is opening up about $100 higher this morning off of its earnings report. So overall, we have a bit of a mixed bag, right? Two of them opening lower, two of them opening higher. Or excuse me, three of them opening lower, one of them opening higher, but it's opening significantly higher. The one that has the most weight is opening just a little bit lower. So we'd have to say that earnings are going to have a little bit of an effect on this morning's movement. I will say that yesterday I was feeling a bit more bearish going into the day. I was feeling, frankly, a lot more bearish going into the day. And for an intraday trades, we actually maintained a pretty bullish stance throughout the day. I've got a level here that you're going to see that level in all of the equity markets because we had looked at this as a potential reversal area, and all of the equity markets popped through those. There's just no getting around it. They all popped through that level and rallied up to the next level, which was here kind of in the middle of that curve. Now, on a 4-hour. Yeah, it was exactly right, Trent. Most of them beat earnings, but they're still down. Same thing with I think Intel was also like that. That they beat earnings, they were still down. That's pretty bearish, right? I mean, overall, that's pretty bearish and a pretty negative sentiment. And we're seeing a lot of negative sentiment in the market. I think what's really happening this week more than anything is that it's a risk off week, right? When I say it's a risk off week, do you think maybe there's some people, some institutional investors that are pulling a little bit of risk off before the election, right? I think that's a potential, is that we're seeing a bit of a risk off. And so no matter how good the earnings were, it's possible that we're seeing just a little bit of a risk off trade and people pulling some money out. And that, I think, could be the catalyst that's really moving that trend. So when I look at the ES, we continue our 4-hour downtrend. I throw the zigzag indicator on there. You can see that we did have a couple of moves on there. Yeah, the only ones that moved up on good are the snap and pins. A couple of them that had really gave us a strong run. And so overall, we're going to continue that generally bearish view and picture. I think that's probably the better way to go. So looking at the ES, we right now are setting up for a really nice rollover. Actually, this is a this is a strong rollover potential right here as prices rallied up, but we got that high upper wick. This is a strong candle to candle short opportunity. just based upon its reversal and where we can see price going from here. Now, it is a Friday, so remember, anytime you hold a Friday position over a weekend, you're going to take significantly more gap risk. So anything that you get into, understand that there's gap risk associated with it. As far as supply zones go, that's not a fresh area of supply, right? We wouldn't consider this a fresh supply area. It's a retest of this area over here to the left. And so I hate to add that as a new fresh area of supply. What I see better is that candle to candle reversal off the shooting star on the ES. And your stop could be just above that 3291 area, just above that shooting star. So keep that area in mind for today, as you're looking at this level. Good morning, Mr. Jersey Trader. Yeah, so that's really, I mean, I think that we're going to maintain that bearish sentiment. When I look below me to the bullish side, we don't have any demand for a little while. And on the daily chart, remember the daily chart, this is a strong topping pattern, right? A very, very strong topping pattern that we're seeing in here. Does it mean that I think we're going to come hammering all the way down to here? Not necessarily. But I am definitely aware of the fact that this low was unable to create a new high on the daily chart. The fact that this low was unable to create a new high on the daily chart is telling. Because if I look at pretty much every other low on the way up, every other low is able to create a new high, right? At some point, it helps to create that new high, and we were unable to do so on this one. And so, especially if we bounce off of this low, because I could see us getting a bounce off this little low, but if it only takes us to about here, and then we drop again, and then we put in essentially what is a descending triangle pattern, then I think you really got to be cautious. Great question, Dennis. Am I sitting on my hands election night? No, I'm not. I'm not going to sit on my hands election night, but I'm also gonna be probably looking at trading micros on election night. I'm not going to probably go in with a full contract. I may go with a full contract. We'll see, but I'm not positive yet. Let's put it this way: I am not going to set it and forget it on election night. That's for damn sure. Um, but I will definitely just be aware of it. You said RSI is showing divergence on the 4-hour. Let's pull up that 4-hour and the RSI. Yeah, we are seeing a bit of divergence there on the 4-hour. I mean, we are definitely in a fairly deeply oversold territory in the RSI. And so the idea being is that supply levels in the RSI, as we come up to quality supply, we should get reversals, but demand levels are certainly not going to hold when we're all the way down here. All right. So that's kind of what I'm looking at in the ES. The best level I see is the candle to candle short opportunity off of this area. Next would be the NASDAQ. So NASDAQ, very similar picture we talked about yesterday. Unfortunately, we were unable to get all the way to this reversal period up here. Yeah, it was limit down for a little bit, but then it was limit down 4 years ago, and then it rocketed straight up. So there's that other piece as well. Here we have a little bit of basing. We had a strong move down in the overnight. I mean, certainly I'm guessing that most of us weren't in front of the markets to take this on this breakdown here in the overnight. And the basing wasn't immediately before the level. It was fairly close, but not exactly where we'd want it to be anyway. And we're getting a similar picture here as we are to the S&P with a reversal candlestick after a rally up in the context of a bigger move down, right? Reversal candlestick in the context of a bigger picture move down. So this might be a decent area, an opportunity to get in with minimal risk. Stop above here because that's your pivot, right? On that level. Looking at if you want to go to a smaller time period on this, and you go to a 15-minute chart, you actually do have this little level right here, which was yesterday afternoon. And what I'm looking at here is this drop. Think about it. Price came all the way up to here before then coming all the way back down here. And so that would make a potential little zone right there, as that one big wick is really where our zone is on the outside of. So that's 13.15, 11.315 by 11.338. Russell, very similar picture to the other two markets that we just talked about, although the Russell putting in a little bit of a double bottoming pattern here with those two lower wicks that hit and moved up, hit and moved up. So those are kind of interesting on those two lower wicks, showing me a little bit of basing. You know, you talked about divergence in the RSIs. You're really going to see it here, right? I mean, you really see it on the RSI and the hourly chart here. Even on the 4-hour, you'll see it pretty cleanly here. So definitely some more bullish divergence in the Russell than our other markets. So if you're looking to say, you know, I think we've pulled down enough and I want to maybe consider getting long, the Russell might be the better one to do it. The problem is, where do you do it, right? Where do you get long if you want to even give it a try? Well, certainly I'd have to wait for me to get above, you know, this little wick up here. You could do it on one of these zones of demand on a pullback, but it has to be a confirmation entry. I'm not a huge fan of that, I will tell you, just based on my overall momentum, but I think that it's a potential. The other potential is really the breakdown below this 1523, provided that we get quality basing inside of that area. All right, so those are our main equity levels for today. The YM is very similar to my other markets with potential candle to candle move here. Remember, it's candle to candle, so it's lowest. The candle to candles are the ones that have that lowest degree of probability. We look at them primarily because they give me good candlestick setups, and we're going with the big picture trend direction. Okay. Let me post the grid into the trade worksheet, and then we're gonna move along. Make that a link. All right, now let's move along to the commodities. So let's go with our energies and metals. So looking at our energies and metals, crude oil yesterday came up through our little 15-minute. It was a bullish day. It was really just one bullish strong hour that put us through those supply areas above us. But things were a little bit greener on some of our other setups when we get into some of the other commodity trades. Looking at where we are now in oil, this is putting in a little bit of a bottoming pattern, right? A little bit of a bottoming pattern being put in. And remember, when I look for bottoming patterns or topping patterns, what I'm looking for is areas of balance that create opportunities for orders to get stacked up. And that's what we see here, right? Is areas of balance, looking for areas where orders can get stacked up. And what that means is that this supply level up above me, technically we're still in a 4-hour downtrend. But this supply level up above me, if I get any basing at all heading into this level, I'm going to abandon that zone. And then that would make me more of a bullish trader. I can very well see that in something like this, price could rocket up into here, and then we could see something like this occur before getting a move higher. So we should keep an eye on that also for a potential breakout area in there if price does indeed get to that level. Now, certainly we still have a breakdown level below here if we get enough quality basing inside of that region. Other than that, I want to stay in between it. Gold yesterday gave us a nice little move off of our 60-minute level. So gold, we got this little move right here. It came down, and then we kind of based around for a while. So in our trade updates, our recommendation was to take some money off the table since we kind of started stalling out. It came back up in the overnight, gave you another opportunity, but notice the first time we pulled back this far. The second time we only pulled back this far. It's now our third time into this area. That means that we believe price is going to rally back up off of this zone. Yeah, so we think that level is not going to hold. And we may see price come back up a little bit. So this was our kind of our breakdown line, if you will, our line in the sand for the breakdown and for when we were getting out of that iron condor that we had talked about earlier in the week. Now, I hate when it does that. Now I'm going to look to that area as a potential reversal with this little bitty wick over wick. It's a very small wick over wick level, and I got to really expand my candlesticks just so that you can see it. Very small wick over wick level, but I think very much in play. Still fits with our big picture trend, but also gives us a little bit of room for price to run up to there. If you're looking for an intraday trade and you think price can run up to there, then you can get long on one of these areas that's a little pullback zone right there, 1875 by 1874. There's a little area in that zone. Natural gas. So nat gas is on our inventory numbers. And remember, this is why we don't trade over announcements. On our inventory numbers, we popped right through that market. Inventory announcements were significantly lower than anticipated, causing price to rally straight up. I'm still holding off on this area down here as my best level. And that's all I'm really going to add at this point. I mean, you can have a breakout trade above here, but other than that, that's all I'm really going to add in this one. And then copper is sitting right at a potential breakdown point. We poked below it in the overnight, but we didn't get any basing in poking below it. And I still think that this is very much in play. Matter of fact, probably more in play now than it was yesterday, just looking at this for a potential breakdown. So I like copper still on the breakdown. All right. So those are our energies and metals. Let me share this grid. All right. So let's go take a look at our ags for those of you that trade on the ag markets. We've got soy, copper, wheat, and bean oil. So looking first at soy. Now, these had a lot of trade updates yesterday. For those of you guys that are unfamiliar with the trade updates, every day when we put out the trade updates, they let me show you where they are. Oh, by the way, you guys, we brand new homepage on the website. So take a look at the new homepage. It's kind of snazzy. Corey worked on it all day yesterday to make it look nice and snazzy. If you go to trade worksheet and trade updates, this is where you'll get and see all of the updates. So in my trade updates yesterday, looking at this is where we can see. You talked about the ES, the NQ, the YM, copper, nat gas, so soy. So we were talking about, on soy, 2-to-1 from the level. If you've not taken stops, move stop to break even. 60-minute supply in corn moved about 2 to way. So we gave you the good areas to look for. Okay, time to take your targets and move stops. That's really what this trade updates page is designed to do. So these are the levels that we have. So today, by the way, a couple of trade updates for those of you that looked on the trade worksheet, and for those of you that are not familiar with the trade worksheet, it's right in here, and we have a list of all of the trades that we're looking at available for you to take note of, with a video explainer on all of them. If you don't know about Traders Army, go to the website, learn more. Use promo code TRADER60 to get 60% off your first month. All right, paid the bills. So looking now at soy on our 15-minute chart, this was the level that we were talking about yesterday. We got a touch into the zone and then moved away from it, got a little bit of a move away before it then came right back up through. So it gave you an opportunity to take a little bit of money off the table. That's awesome, man. Looking forward to having you, brother. It'll be, you just make sure you ask a lot of questions. That's rule number 1. We want you to ask a lot of questions, because frankly, it makes my trading rooms that much better when people are chatting inside the trade rooms. So we have right there at 1062, a little bit of resistance, That could be a breakout point. And the reason I'm looking at that for a potential breakout point, our big picture trend, we did break below some of those swing lows and swing highs. I would say that, if we stay down here, we go sideways a bit, and then there's a bit of basing, we could see price move up to that level. Okay, next would be corn. So looking at corn, corn rallied up into this region, didn't get near our pivot, stayed well below our pivot, and then dropped away for a nice little 2-to-1 profit opportunity. it's also putting in a bit of what could be bottoming. But on the 4-hour, the corn versus the soy is a bit stronger on the downside here. So I would look for this one, whereas soy, you might actually have a breakout to the upside. And we looked at basically this level here. What I would say is keep your options open, and I don't think this one is as strong to the upside. So I would look to this one potentially. It has the other direction to come back down. So if I've got one that I'm looking for, okay, if we go up, I trade the strength. If we go down, I trade the weakness, right? Wheat is somewhere right in between. And we looked at wheat yesterday, and it's also kind of right in between, has that breakout. And then bean oil yesterday hit this level here, gave us a nice little move away for a quick profit objective. And now we're just chopping around sideways. This one also looks like a potential above this region here, provided that we get the basing. All right, get rid of these. So I know we went through a lot of levels there fairly quickly, but I wanted to at least show all 4 of those. Let me share this grid. For those of you that haven't seen, we started sharing the grids in groups of 4. For a while there, I was doing in groups of 6, and it was just too hard. There was just too many charts on one grid in order to share. So that's why we moved it to groups of 4. We talked about that yesterday in the live trade room, so it's easier to see. Let's see. Jasmine says, Mr. Chuck, on the YM 26.8, since we've already touched that twice, will you still put a supply zone there? Just take it to a retest. So let me go back to the YM before we go into to currencies and show you that. So you're talking this area right here. I would not. And the reason I would not is because we've hit it a couple of times. That's exactly why I would not. I think that is not a true level that I would look for, because I think that we'd probably get basing in front of that level. And that's why we're looking mostly at that candle to candle opportunity. Remember, when we go 2 to 1 on that candle to candle, you take some money off the table. All right. Bonds and currencies. So going to bonds and currencies. So looking first at the ZN, which is our 10-year note. We looked at the 10-year note, and we didn't really have anything on the chart. We still don't really have much on the chart. Little area here that I think we could see a bit of a reversal in. Now, the reason I'm looking at this is because it was support back here. It was resistance over here. That's the definition of what we look at in what are called fair price value areas. And I might even consider this a line of control. So with that line of control being there, that's oftentimes going to be a magnet for price and an area where I could see justification for a reversal. 138.22, 138.24, very small level. The 30-year Treasury bond, we looked at that one yesterday as well. We expected potentially for price to break down below here. It did break down below there, but without giving us the prerequisite basing necessary for a quality entry. However, that area itself on a smaller time period actually looked just above for a potential reversal. Looking at the euro did not come anywhere near our supply level yesterday. We still have that area very much intact. It's been very wicky right now. So I would look for the next move of price to drop from here. And that's really just in staying with our downtrend, right? For the next move for price to drop. So look for a the basing of a breakout to form somewhere inside of this market. And if we get basing, then look for a potential breakout out of this region. But the basing isn't there yet, not even close. So nothing to see here yet, people. All right, move along. Canadian dollar. Canadian dollar gave us a quick touch and go off of the level. And then it kind of stalled a bit by giving us that quick touch and go and then the quick stall. It moved right about 2 to 1, and so we wanted to take our money off the table. It was really not a great trade overall, and so didn't give us a great result, and so we wanted to move our stop pretty quickly on that to move it to break even though it had gone basically nowhere, right? So 6 candles had gone basically nowhere. And that was our on our updates. That was the talk. It was met entry and has gone nowhere. So even though it hadn't gone 6 candles, move your stop to break even, and then it gave you this little hit out right here. Now what's it doing? Well, if I were to throw on a quick indicator, and we'll use my MACD indicator here, we can see that we're clearly getting higher swing highs. I've been getting higher swing highs and higher swing lows, in my MACD, even before I put in a higher swing low in price. And so, with that being said, if you want to say, well, I think if we get above here, we've got some bullish momentum, which I think that we would, provided that we get the quality basing above there. If you want to be a little bit more aggressive, this is almost, though it's not officially a cup and handle pattern, this kind of looks like a cup and handle pattern, where you can get long even earlier if you are a bit more aggressive in that trade. All right, let me share this one. Put this in the sheets. All right, and then the last page. And I know this. I feel like I'm going through more markets now that I went to. What is that? Now it looks like I'm doing 20 markets. So it's getting to be a little bit more difficult to get them all in. I will say the New Zealand dollar. So looking here at the New Zealand dollar, actually looks like an inverse head and shoulders. Which one, Liz? On the prior market, the Canadian dollar? Yes, I think I think there's actually a lot to be said for that. Let me go back to it. Yes, it does. Very good. Nice eye. Good catch. You're right. It definitely looks like an inverse head and shoulders. So a good opportunity in there. Yeah, the New Zealand dollar did work out well yesterday. Nice little move outside of that level. That was our 15-minute zone. Price came in, gave us a really nice touch and go off of that zone, giving us a good entry. The second touch, we got a less move away, and then the third touch, we popped through it. Right. So that's a clear picture for a future breakout. So we're actually sitting right now where I think we could see a breakout to the upside in the New Zealand dollar, and we've put in a nice bottoming pattern for price to move higher. Now, there is some basing up here, and this goes back to the question. Somebody had this question in our open forum the other day. When should I ignore basing? Well, taking a look at this basing, is this basing that you'd ever take a short on? Would anybody take a short on any of this basing, on any of this level? No, we wouldn't, right? We wouldn't take a short on that. So it's probably not going to be a great stopping point on a breakout. Matter of fact, I'd probably want to look somewhere up in here as my next stopping point on a breakout. Ooh, actually, well, that one's good. This one's better. Why is this one better? A couple of reasons it's better. Number one, it's closer to the pivot. That's the most important thing. It's closer to the pivot. Number two, better time of day, right? Much, much better time of day. All right, Great British Pound. So our Great British Pound level, we identified a 15-minute zone yesterday. Price didn't come into it. We've actually just reached it here in the last few minutes. So if you're in this position on the Great British Pound 15-minute chart and you've entered that trade, it's going your way, but you should look for a target right here. This is where your target is going to be on this position. And why is this going to be a target? Well, because that's the opposing demand. That's the origin of the move up. So this is your target one if you got short on this Great British Pound. If you didn't get short, well, then you've missed it. Don't do it again. This level is not going to be one that I want to take a second time around. So I'm going to remove it at this point, but we're coming close to that target area. Looking at the hour or the 4-hour chart, our trend is still down. We're putting in that, a little bit of that bottoming pattern here. So I think we could see this come up, but there's nothing clean for me to give me an entry to get me back into the trade as of yet. Could I get long down here at this area where we talked about as our profit target for our short? You could, yes. That's an okay area to get long. I'm not a huge fan of it because it's not a great, super clean setup, but you could do that. Um, I don't love it. It's okay, but I don't love it. Japanese yen. We looked down here at this Japanese yen level yesterday. This actually was a really nice, strong move into the zone. Exactly what we want. And it popped a little bit below, may have stopped you out. And if it didn't stop you out, 1, 2, 3, 4, 5, 6 candles later, you still took a small haircut on that trade. Now the level itself wound up working out pretty well. But now we're just sideways. So now we're just kind of sideways, and there's nothing in here that I want to do on the hourly chart, and the 4-hour still has that breakout area up above, and I should probably put that in blue. The 4-hour still has that breakout area up above. We're just nowhere near it at the moment, and we're inside of that bigger kind of range area. I'm not going to add anything to this. I feel like it would be too risky. Jose, is a tweezer top forming in the Great British Pound? What time frame would you be looking at for a tweezer top, Jose? Oh, right here on the hourly. Yeah, a little bit of one. That looks a bit like a tweezer top that's forming. Um, that's already formed, I guess you would say. I mean, this candle's not done printing yet. We still have a 30 minutes on that candle, so it's not a tweezer top as of yet, but it looks like it could be forming one. Yes. In a true tweezer top, I want to see the wicks a little bit higher, but yes, that would be what that picture looks like. And then the Aussie. So in our Aussie position, we just missed entry on this one. It gave us an entry here, but that's why we made it a confirmation. We just missed it. Price moved away, and now we're coming close to it again. I'm going to remove it at this point. And the reason I'm going to remove it is because I don't think that it's going to be as strong the second time through. Okay? I don't think it's going to be as strong the second time through. I think we could get long soon. I have a higher swing low, but I don't necessarily have a good clean entry on here. So I'm going to put a breakout line here above that tweezer top, which looks a lot like the one Jose just pointed out in the Great British Pound, by the way. But I don't necessarily have a whole lot aside from there. So today, I'd play today with an abundance of caution, just like we have the whole week. It's been a pretty good week overall. Yesterday was a little bit more of a haircut day for me, with looking bearish, and the markets decided to go bullish on me in the equity markets. Now, the commodity markets wound up going out really, really well for the day, and so overall was a pretty decent trading day when you look at the results from yesterday's setups. Today's setups, we got 20 different markets here that we've looked at, and we may go absolutely nowhere today. We may go absolutely nowhere. We may give a little bit of a rally. I'll be interested to see what happens right as the market opens with the $5 gap down in Apple, as well as the big gap down in Amazon. When I go look at these, Apple's opening up. Apple's opening up somewhere down in here, which is below the most recent pivot. So it's going to open up just a little bit below the most recent pivot. Does that mean that it drops a bit further? I will still say this is a great buying area if price gets down to that zone. Facebook's going to open up just a little bit lower, not enough to even really think about. But the one that I do want to look at is Amazon. Amazon's going to open up down at 31.58. So we're looking somewhere down here where all this noise is. Well, we're not gapping down into a demand area. We're gapping down into an area where there's not a whole lot of demand. I mean, when we gap down into a demand area, oftentimes you see price rally. When you gap down below where your demand would be, sometimes that can be a catalyst for price to fall further. I'd be interested to see if we come down to here. Now, why is that important? Well, it's important because what happens at the open of these stocks is going to be an important play as to what happens after the market opens. Right? Now, Google, if I look at this on a bigger picture, Google's going to open up above its most recent pivot. So Google's going to open up somewhere about here. right, above its most recent pivot, giving it essentially room to run all the way up into here. We'll see, what that does. What I would say is if you're not in an equities trade at the open, don't get in one right at the open. Don't get in one right at the open. Allow the markets to settle out just a little bit. So, all right, everybody. Well, that's all I have for today. I hope you guys have a phenomenal, phenomenal weekend. Those of you that are going to join us in our live trade room Sunday night, I look forward to seeing you on Sunday evening. If you're not part of the live trade room Sunday night, come and learn what we're all about. I'd love to have you there with us on Sunday night. Tradersarmy.com, promo code Trader60, and I will see you soon. Thanks.